certainly a concern that there's going to be some downside pressure here. So whenever we see things like this where we see a number of candlesticks that are sitting above a certain area and then we've had substantial sell-offs right afterwards, we want to be very cautious of that. So again, we're likely going to see a pullback towards this 105.66 area, at which time we can consider our long positions, but we will review this out throughout the course of the week. But again, we're going to have to monitor this very closely. A fair bit of downside risk here on US Canada to start the week. Now going into our next pair, we're going to be looking at the US-Japan currency pair. Now if you remember what I'm saying about the yen futures, we've got a crossover here that's taken place to the downside again. From vantage point, this has taken place at the beginning, essentially at the beginning of January. These candlesticks have made repeated attempts to get through the 18-day predicted moving average. From vantage point, you can see how they've just poked above it, and each time there's been a substantial sell-off. The most recent one, we can see this long red candlestick that's moved lower, and the 8-day, the 3-day, and the 18-day, the 3-day and the 8-day, excuse me, bouncing off the 18-day predicted moving average from vantage point, suggesting that we may be getting ready to retest this 85 level, 86 level. But for now, we have a clear sell signal on this. We're actually not in oversold territory here, so we have room to extend on the MACD, the predicted TSI, and the predicted RSI. So again, the yen currency futures, dollar yen, everything looks pointing lower on this for now. Only a sustained break, in my opinion, of the between 90.41 and 90.91, 91.50. We have a substantial amount of resistance up here. Right now, to begin the week, we've closed at 89.21. We have our three levels of resistance that we can identify: 89.67, 90.07, and 90.41. Any opportunity towards 90.41 can be used as an opportunity in the short to medium term to set short positions. Now going into our next pair, we're going to be looking at the Euro US dollar. We can see again here the pattern looks very similar to the Euro futures. We've had this crossover that's taken place in early December. Now, a good thing to point out here that if we were actually looking at the software and we entered into a short position based on the initial crossover from vantage point at the beginning of December, this would have been approximately a 1,200 pip move if you just entered into a single position here. Now, any move higher simply could be used to set further shorts. Now for now, what we can do is we can identify the three major levels of resistance: 140.42, 138.82, and 137.61. These are our key levels right now. We've closed at 136.76. I anticipate the 3-day exponential moving average from vantage point likely be a good area to set short positions to start the week at 137.61. So in short, by looking at this at 140.42 is a major resistance level, and that's likely to hold throughout the course of the week. We're going to see minor retracements, but again, 137.61 is likely a good entry point to get in for shorts at the start of the week once we've had a little bit of a retracement higher. Now, looking at the New Zealand US dollar, we can identify major levels of resistance: 71.06, 70.19, and 69.38. We're in a clear downtrend on this. We've broken through some major support levels. Any retracement higher towards this 69.38, between 69.38 and 70.19 is an excellent area to set shorts. We still have room to extend lower here, probably towards the 66 area. That's the likely outcome to start the week here. Australia-US dollar looking very similar to New Zealand US. We can identify three major levels of resistance: 89.40, 88.33, and 87.27, with a close of 86.82. A good area to likely get into our short positions here to begin the week will be between the 87.27 and 88.33. Again, we've got heavy downside pressure here. The yen cross is all putting pressure on Australia US, plus the strength in the US dollar index. All of these things will contribute to further likely Australia's weakness. So again, we want to, beginning of the week, only a sustained break of 89.40 will take the pressure off the downside here, and with the Aussie US dollar, we're likely to extend much lower. US Swiss franc very much mirroring the Euro US, except in the opposite direction here. We can see that we've had the initial crossover to the upside from vantage point again took place at the beginning of December. So entering into the buy positions around the $1, 101 area. We're now currently trading at, everybody can see this hopefully okay, at the 107 mark. You know, we're looking at 700 pips if we're just entering into one or two positions. You know, this day-to-day, the intra-day-to-day stuff is very difficult. When we look at positions this way, it's a single move. So key levels of support to identify right now: 104.86, 105.81, 106.63. To start the week, 106.63, a likely good entry point to get back into fresh long positions. However, risk is to the 104.86 area, and all stops need to be below this area. Very important to identify your major levels of support using the Vantage Point software, which is of course the 18-day predicted exponential moving average. So again, we're still looking to hold those long positions. US Swiss franc likely on its way towards a new range top somewhere in the 109, 110 area. But again, it'll be a slow moving process, but the base of that range right now currently sits at the 104.86 area. Now, looking at our final pair here, we're looking at the British pound US dollar. We can see here we've also crossed over. We've had a number of crossovers here on the British pound. There's been a considerable amount of volatility on this pair. However, the primary trend again remains to the downside. The initial crossover from Vantage Point took place in the 166 range. We're now at we've now closed the week at 156.40. Again, another 1,000-point move here from Vantage Point. Very very interesting move here. So we've had a couple of minor intraday crossovers here, but again, the downside pressure again prevailed, and we've moved substantially lower. So to identify key resistance areas to begin the week: 160.29, 159.09, and 157.61. These are our three levels of resistance that can be identified as resistance 1, 2, and 3 using the predicted 3, 8, and 18-day exponential moving average from Vantage Point. So again, whenever we're entering into short-term positions, we need to identify the longer-term resistance areas, and that's what we're using these predicted moving averages for. Now, looking at this, we can see that we have hit oversold levels, but we're now beginning to extend higher. The predicted MACD has room to extend. The predicted TSI, from Vantage Point also has room to extend lower. So looks like to begin the week, the British pound is going to come under further pressure. Again, it's going to come under pressure, I believe, from the cross pairs also: Euro, Great Britain, Japan. So it's not looking very good to start the week for the British pound in general, particularly against the US dollar. So that is the Forex market outlook on the majors for the week of February the 8th, 2010. And again, my name is Greg Furman, market analyst